If you're new to crypto, you might be feeling pretty overwhelmed right about now. There are thousands of cryptocurrencies trading across dozens of exchanges 24/7. Some of them are exploding in value, and others seem to be crashing down to zero. In the midst of all this madness, there's information coming at you from all sides telling you how to invest your hard-earned cash and fueling your expectations for a future of financial freedom. If you're already holding some crypto coins or tokens, you might be second-guessing your current holdings. If you have yet to put down $1, you might be wondering where to begin at this point in the bull market. So, if crypto is new to you or you're new to crypto, the pointers I'll be giving you today will help make sure you don't get lost in this crazy world. Not so fast, grasshopper. If I went any further without a disclaimer, that would be improper. You should know that I am not a financial advisor, and all the information in this video is to help make you wiser. If you're looking for financial advice, calling your financial advisor should suffice. Welcome to any new faces on the other side of the screen. I'm Guy, the crypto guy, and this is what that means. Coin reviews, market news, technical trading, and regulatory blues are just some of the crypto content that makes my world go round. The Coin Bureau is where this knowledge can be found, so be sure to subscribe and ping that notification bell if you're down. If you do the same with your gaze, you'll see that the timestamps for this video are clearly displayed. You can use them to get a glimpse of what's next and even skip ahead if you think that's best. That's enough rhyming for today. I'll crack on with this video, if I may. Whether you're sitting on cash or crypto, the first thing you need to do is put things into context. Like every financial market, the cryptocurrency market has its own cycle. This cycle lasts about 4 years and seems to be caused by the Bitcoin halving, which occurs every 4 years. In short, this is where the amount of BTC being mined from each block is cut in half. Assuming demand stays the same, this 50% reduction in supply leads to a 2x increase in the price of BTC. However, demand for Bitcoin has been gradually increasing over time, and its impressive price action compared to other asset classes only drives more demand and adoption for BTC. This is basically why BTC is up 10x and not just 2x since the most recent halving took place in May last year. Historically, the peak of each cryptocurrency market cycle has taken place about a year and a half after the Bitcoin halving. This suggests that the top for this current 4-year cycle will be sometime at the end of this year, specifically late November or early December 2021. At that time, the price of BTC will top out at anywhere between $80,000 to over $150,000. Note that this is by no means guaranteed, and it's also possible that this cryptocurrency market cycle could end much sooner or even much later than projected. More importantly, you should know that altcoins follow a slightly different cycle than Bitcoin. Almost every other cryptocurrency on the market is highly correlated to Bitcoin. This means that when BTC pumps, all the other cryptos pump with it. When BTC dumps, you already know what happens to those alts. Now that said, this correlation isn't always that apparent when BTC is going up. This is because the positive price action of most altcoins tends to lag behind Bitcoin and move upwards when the price of BTC has been steady for a few hours, days, or weeks. During these periods, Bitcoin dominance often drops, which means that money is moving from Bitcoin into altcoins. This is what we've seen over the last couple of weeks, and it's why many altcoins have seen double-digit and even triple-digit percentage gains during this period. These lucrative returns are probably what attracted you to cryptocurrency in the first place. And if you're questioning your current holdings, it's probably because they haven't gone up as much as you'd hoped. To be honest, you could probably buy just about any cryptocurrency and make a profit between now and the end of this bull market, even if you don't manage to sell the top. However, you won't make very much if you blindly throw your money at every shitcoin being shilled on YouTube. To get the gains you've been dreaming of, you need to learn to measure the risk and reward associated with each individual cryptocurrency you're considering. In a recent interview, Binance founder Changpeng Zhao noted that he started investing in Bitcoin after his friend said, quote, CZ, you should convert 10% of your net worth into Bitcoin because there's a very small chance it will go to zero and you'll lose 10%. There's a high chance it will go 10x and then you could double your net worth. CZ subsequently sold his Shanghai apartment to go all in on Bitcoin and now has an estimated net worth of $2 billion. Now, you might be thinking that this is logical and that you would have done the same if you'd been in CZ's shoes 10 years ago. But this is today and that was then. Back in 2011 and 2012, BTC was not established. It had no infrastructure. It had no real-world utility. It had almost no holders. And most people holding BTC expected it would be banned if it ever got too big. In other words, investing in BTC back then carried a risk that few of us would be able to stomach because it could have just as easily gone to zero. The reason why CZ was able to take such a big risk, though, was because he probably knew that he could recover from the loss if it all went south. This is because CZ was young, with no responsibilities or dependent family members, and probably had little to no debt. Unless you're in the same position CZ was 10 years ago, you probably won't be able to take on the risk required to get those sorts of gains at this point in the bull market, nor should you. Don't get me wrong, this doesn't mean that you still can't make incredible returns on your cryptocurrency investments. It just means that you'll need to stick to coins and tokens that carry a low risk. Now, I know low risk is a funny thing to say about cryptocurrency investments, but that was then, and this is today. Bitcoin has been around for 12 years now and has continued its growth with significant adoption. In terms of risk, investing in BTC is probably not far off from investing in Tesla stock, especially now that Tesla holds billions of dollars of BTC. Both BTC and Tesla stock are still on the deeper end of the risk pool, however, and if you want to get a better sense of where Bitcoin fits in with the broader financial market, you can watch my video about that using the link in the top right. Even though cryptocurrencies in general are a risky investment, there are radically different degrees of risk and reward in the crypto market. Bitcoin is a cryptocurrency that I consider to be low risk, low reward. By low reward, I mean that BTC could go up by another 50 to 100% by the end of this bull market, and possibly pull another 5 or 10x by the end of the decade. This is still magnitudes more than just about any other investment on the planet, which is something you should keep in mind before you complain about these returns. Another cryptocurrency that falls into this low risk, low reward category is Monero. This is because XMR offers the best privacy features of any cryptocurrency on the market and has stood the test of time like BTC. Not even the US government has been able to crack Monero's code, and the project has also continued to improve its privacy features and protect its network from minor centralization. Given the dystopian direction our society seems to be heading in with CBDCs and the like, the ability to transact in a private manner, free from the eyes of central banks and governments, will be priceless. Grayscale's recent filing for an XMR trust reveals that there even seems to be institutional demand for Monero, which is interesting to say the least. The only real risk XMR seems to have is delisting from exchanges, which is why I consider it to be low reward compared to other promising cryptocurrencies with significantly smaller market caps than BTC. Thankfully, it seems like most of the exchanges that were planning on delisting XMR have done so already. Moreover, projects like Thorchain are building decentralized exchanges that make it possible to trade cryptocurrencies between different blockchains in a trustless manner. Monero is just one of the privacy coins Thorchain's Asgard DEX will support, and once that goes live, there will be nothing to stop people from trading XMR for BTC or any other popular crypto. For these reasons, I think XMR will be around for quite some time, and its price could easily go up by the same percentage as BTC by the end of this bull market and beyond. You can learn more about why I'm bullish on Monero by clicking that handy link up in the top right. When it comes to medium risk, medium reward crypto plays, smart contract coins are a good place to start. Examples include Ethereum's ETH, Polkadot's DOT, Cardano's ADA, Solana's Sol, Cosmos's Atom, and Kusama's KSM. Many people believe that a smart contract cryptocurrency will someday overtake Bitcoin as the largest crypto by market cap, and it's easy to understand why. Smart contract cryptocurrency blockchains make it possible to build the free future of finance that was envisioned by Satoshi Nakamoto and the cypherpunks that came before him. Lending, borrowing, and trading in DeFi. NFT art and virtual worlds. Blockchain domains that can't be censored or taken down. Digital identities that actually preserve privacy. And decentralized content platforms that will topple centralized monopolies like Spotify and Facebook. All of this and more has been built on smart contract blockchains, mostly Ethereum. The problem is that there's no telling which smart contract cryptocurrency will be the biggest by the end of this bull market, much less by the end of the decade. This gives smart contract cryptos a medium risk designation, and this risk is reduced if you have positions in all top smart contract cryptos. Note that this reduction in risk will also reduce the medium reward, which I would say is roughly 2 to 5x for ETH, DOT, and ADA, and possibly more for KSM, Atom, and Sol. Smart contract coins aren't the only class of medium risk, medium reward cryptos either. I would say that exchange tokens carry a similar level of risk and reward. This includes BNB, the FTX token, the Huobi token, the KuCoin Shares token, and OKX's OKB token. These cryptocurrencies are purposely designed to go up in value, but are also centrally controlled, which is where the risk comes in. However, something tells me that the likes of Binance, FTX, Huobi, KuCoin, or OKX will not be going out of business anytime soon. In fact, the more trading volume these exchanges experience, the more money they allocate towards the buyback and burn of their respective coins or tokens. Thanks to this bull market, most exchanges have set record levels of trading volume and will probably continue to do so well into the summer. This is why we've seen the rise of exchange tokens over the last few months, and in some cases, you can actually see where the buybacks and burns happened in their price action. As a cherry on top, some of these exchanges are aggressively building out their own DeFi ecosystems, most notably Binance. Besides driving its millions of users to its DeFi ecosystem, Binance is actually providing funding and liquidity to many of the projects building on the Binance Smart Chain. This creates a perfect pretext for serious adoption, which is what we've seen with the Binance Smart Chain and are starting to see with FTX and its spin-off DeFi ecosystem being built on Solana. Exchange tokens could see another 2 to 5x before this bull market ends. And I'm sure there are videos out there that can explain these in more detail. The category of cryptocurrencies I personally pay most attention to are those that combine a medium risk with a high reward. These are cryptocurrencies that meet the following criteria. 1. A market cap of at least a few $100 million with good exchange support and ample trading volume. 2. The project has a real-world use case or one that solves a real-world problem. 3. The use case is easy for the average person to understand and see where the value is. 4. The project has a functioning product that has seen decent adoption. And 5. The crypto must have robust tokenomics and token allocations. Honing in on these sorts of cryptocurrencies can be tricky at this point in the bull market, mainly because the fifth criteria is almost never met. In my experience, cryptocurrencies that meet these criteria see growth of anywhere between 10 and 20x within a year or less. Theta is a cryptocurrency that meets all these criteria but has already seen most of its growth. When I mentioned Theta as one of my top crypto picks for 2021 last year, it still had a market cap in the hundreds of millions. The Theta network powers a decentralized streaming protocol that makes it possible to deliver HD video at low cost and with minimal lag. Now, I reckon that's a use case that's easy to understand and also extremely valuable since Google, Samsung, and Sony have all partnered with Theta over the last year. Theta has had a functioning product since 2019, and both Theta.tv and the Theta Edgecast have seen a gradual uptick in growth and adoption since their releases. Most importantly, Theta has a maximum supply with no inflation. All this supply is in circulation, and most of it is held by the community, not the Theta team or big investors. Theta has consequently seen a 13x increase in price since December 2020, when I mentioned it in my top crypto picks video. I actually think Theta might have a bit more room to grow, and you can find out why by watching my recent video, and you know where to find that. The final category of cryptocurrencies is the one you're all familiar with, and that's high-risk, high-reward coins and tokens. These cryptocurrencies offer returns of 100x or more in a matter of weeks or months. Now, finding these coins or tokens is extremely hard, and investing in them carries the same risks as investing in BTC back in the day. It's all or nothing. Pro tip: if you've learned about a 100x altcoin on YouTube, you're either late to the party or you're going to get dumped on. The best places to scope out these spicy cryptos are in up-and-coming DeFi ecosystems like the aforementioned Binance Smart Chain. Now, I actually have a video dedicated to doing just that, which I'll leave in the video description. Besides Binance DeFi, there will soon be other DeFi ecosystems ripe for the picking on Polkadot and Cardano. There are even a few promising projects that pop up in Ethereum's DeFi ecosystem from time to time as well. The problem with this form of phishing is that experienced traders and bots know how to read blockchains and are able to follow these tokens from the moment they're minted. What they do is wait to see if the newly minted token is being bought up by wallets known to belong to famous people in the crypto space. They then buy in as early as possible, sometimes well before you or I get word that some new crypto project is in the works. When we go in like lemmings to buy this 100x altcoin, these pro traders and bots dump on us like a psycho X. This is why you might be better off hunting for good ICOs if you're looking for a 100x return, assuming you're in a country that doesn't have strict securities regulations, of course. You can research upcoming ICOs using ICO drops. Ideally, the coin or token being sold should be native to the blockchain of the project, and at least 20% of the initial supply should be sold during the ICO, with a strict vesting schedule for the team and private investors. A good example is the recent Casper ICO. Casper's native CSPR coin was sold via CoinList last month for anywhere between 1.5 cents and 3 cents, depending on the lockup period. 40% of CSPR's initial supply was sold during the ICO, and all CSPR coins allocated to the team and private investors have lengthy vesting schedules, meaning there is no risk of dumping. Just last week, the CSPR token started trading at a price of $6, which was 200x more than the 3-cent ICO price option. Now, don't get too excited. ICOs like these are damn near impossible to participate in. Case in point, there were over 170,000 people in the online waiting room before the Casper coin sale began. If you want to try your luck, I happen to have an entire video dedicated to sniffing out these super token sales. Click that link quick. With all the crypto craziness going on these days, I think it's more important than ever to remember to take a step back and look at the bigger picture. The cryptocurrency market is quite new and still has a lot of growth ahead of it. Whether it's Bitcoin, Ethereum, or some other altcoin, chances are you'll make a pretty penny if you remember to take profits before this bull market ends. While it's quite unlikely that you'll become a billionaire like CZ, the potential to pocket the capital you need to move closer to that dream of financial freedom still exists in cryptocurrency. The difference is that you're going to have to dig much deeper than before, especially when you consider where we are in this bull market. We're closing in on a year since the last Bitcoin halving, which means the bull market could be over in just 6 months or less. Most cryptocurrencies have already seen their growth, but there is still growth to be found regardless of the coin or token. I personally think a 100k Bitcoin is possible, especially if we see a Bitcoin ETF. Once Ethereum's EIP 1559 is passed, I think ETH could touch 5k. If Theta manages to grow out its network with its upcoming 3.0 rollout and onboard more institutions in the tech space, I don't see why it couldn't hit $40. Heck, even BNB might pull another 2x before the dust settles. There is still insane potential in ICOs as well, but I will admit that it's frustrating to see how oversaturated that niche is. Everyone and their mum seems to be trying to launch an ICO, and most projects allocate less than 5% of their initial ERC20 supply to raging retail investors. I get the joke about being in it for the technology, but the greed is off the charts in crypto these days. Whatever the outcome is for your portfolio at the end of this bull market, remember that the knowledge you gained is more valuable than any currency. What you learn is ultimately what will make you rich, so be sure to binge watch the videos on this YouTube channel and fill up on some facts. If you enjoyed today's episode of the Coin Bureau, be sure to smash that like button, please. Thank you very much. Subscribing and pinging that notification bell will secure your seat at the next screening. If you're cautious about what goes on behind the curtains at the Coin Bureau, you can become a backstage VIP by following me on Instagram and follow me around on TikTok. Twitter is where I tackle the top crypto topics, and the Coin Bureau Insider Telegram channel is where you'll get the crypto market insights you crave. My weekly newsletter gives you the finest selection of crypto facts you can finesse to fluff up your portfolio too. If you want to support the channel while supercharging your style, be sure to snag some crypto swag from the Coin Bureau merch store. While stocks last, of course. That concludes today's crypto commentary. I've got work to do fighting the FUD, so I'll see you folks again very soon. This is Guy, signing off.